Thanks so much. All right, how's everybody doing? Good. That was an amazing last speech. My director of research graduated from Chapman, and now I understand why he's so smart. Let's talk a little bit about crypto. Let's start with some hands. How many people out there are willing to admit that they own a crypto asset? Bitcoin, Ethereum, etc. I see a lot of hands. How many people think it's totally crazy and going to zero? Okay, we have some honest people in the room. I like that. How many people understand what a blockchain is and how it actually works and think they could give? Okay, we have a few hands in the front. I see how it distributes. That's what we're going to do today. We're going to talk about a little bit about if crypto is the future of finance. And I thought I would start here. It's a crazy thing to move into a new area of investment and have your investment heroes offer quotes like this. This is what Warren Buffett said about Bitcoin. What I love is that he squared it because rat poison isn't bad enough. It's like, like my kids, like the next thing, no, it's rat poison cubed. But as bearish as Buffett is, there are people who are equally as bullish. Here's Michael Saylor, chairman of Strategy, the most universally desirable property in space and time, which is a pretty big statement. More bullish and bearishness. Sorry, just trying to get this to click forward. Jamie Dimon, CEO of JP Morgan, called it a pet rock. His own analyst said it may be a pet rock, but it's a pet rock that's going to $146,000, which is pretty fun as it competes with gold. We have Larry Fink, the CEO of BlackRock, who called it an index of money laundering in 2017. And then we have Larry Fink when he has $1 billion Bitcoin business, calling it a currency that's going to transcend any one currency and currency valuation. It's amazing what your pocketbook does to your brain. So which is it? That's what I want to dig into. The thing about crypto that's so confusing is that it's either the greatest thing since sliced bread or the worst thing ever created. And it's going to either $1 billion or zero. And of course, the answer is somewhere in the middle. So what I want to do today, this is very small font, is just offer some plain English explanations. I'm going to start at the very beginning and actually try to give you a plain English description of what a blockchain is that you can understand, and then build from there to talk about why I actually do think it's the future of finance and why I think blockchain and Bitcoin and Ethereum are the most important financial innovation over the last 50 years. And if I'm right, then maybe you can decide to buy it. I'm not going to talk that much about the market. Let's talk about what crypto is and why it matters. Okay, here's the most important slide. Bitcoin is not about buying coffee. I'm the CIO of one of the world's largest asset managers. Our assets are actually up. We now manage about $15 billion in assets. I've never bought coffee with Bitcoin. Never have. I would never buy a mocha frappuccino in general. That's not my vibe. But I've never bought coffee with Bitcoin. And yet, I think it's the most important financial innovation over the last 50 years. And this is not a joke slide. This is actually an important slide. Because I think the thing that confuses people about crypto the most is it's called a cryptocurrency. And we use currencies to buy coffee, and no one buys coffee with Bitcoin. Therefore, it must be a fraud. I want you to reframe that, stop thinking of it as a cryptocurrency, and think of it as a technological breakthrough, a once-in-a-generation technological breakthrough that brings money and property into the internet era. You won't be able to read this slide, but here is all the computer science research that went into the development of the Bitcoin blockchain, starting back in the 70s. It actually started even before that. The effort to make blockchains was debated at MIT, at Stanford, at the National Science Academy for 40 years. And the Bitcoin blockchain didn't just bubble up and appear as this new idea. It was a major evolution of decades of research. So what is a blockchain? How many people use PayPal? Everyone. Or Venmo? The thing we love about PayPal and Venmo is that it moves money instantaneously. And the thing we hate about banks is that they take forever. If I write you a check from my Wells Fargo account and you deposit it at JP Morgan, it will clear in 5 days. That's ridiculous, right? I can get an elephant delivered by Amazon in a day. Why does it take 5 days for a check to clear? No one ever stops to ask, why can PayPal do what JP Morgan can't do? And the answer is not that Elon Musk was such a genius. It's really simple. Why does PayPal work? PayPal is one database. So inside PayPal, they can see every account. So if I say I want to send you $100, PayPal can look, it can see I have $100, and it can transfer it to you as fast as you change a line in Excel. The reason banks are slow is there are two databases. If I give you a check from Wells Fargo and it gives it to JP Morgan has to check with Wells Fargo to make sure I have the money. So that 5-day delay is because there are two databases. And of course, they're not two, they're thousands. So you have all these banks talking to one another and things move really slow. So in other words, one database is fast, a million databases is slow. What is a blockchain? All a blockchain is, that 40 years of computer science research, is the first time in human history we've been able to have one database that's available everywhere in the world, that everyone can see into, that updates in real time, but is not controlled by any central party. So PayPal is one database that only PayPal can see into, and PayPal controls everything in there. The Bitcoin blockchain and subsequent blockchains are one database available everywhere in the world, always accurate, updates in real time, but no single party controls. Why does this matter? Well, it lets you do 3 things we've never been able to do before. The first is we can move money instantly around the world. I can literally move $1 billion over, let's say, the Ethereum network and have it settle in a matter of seconds, 24/7, 365. I love when people say crypto can't do anything. If I wired money internationally on a Friday, if I sent $10,000 to London, it would get there on Tuesday. And that's from the largest banks in the world. People with 200,000 employees, offices in the US and London, it takes 4 days for money to move internationally. On the Ethereum network, I could move that in 10 seconds for a fee of about a penny, and it would settle within that time period. That's an incredible advance. And it's not just money that's slow. Stocks settle in 1 day. There was an incredible Bloomberg headline earlier this year that said stocks settle for the fastest period in 100 years. Because 100 years ago, stocks settled in 1 day, and then we went to 2 days, and we finally caught up with 1920 this year. Think about something else in your life that is finally moving as fast as it did in 1920. Money is the only thing. It's the slowest moving things in the world. Crypto fixes that. It lets it move at the speed of light. That's not the only thing it does. Once you make money natively digital, you can program it like you can program computers. So for instance, think of a trust agreement. Many of you probably have trust agreements for your kids that say something like, give Patrick $1 million when he turns 30. And we hire lawyers to execute those trust agreements. But once money is natively digital, you can program that in to automatically execute with no fees when Patrick turns 30, release $1 million to him. And it's not just that example. I'll give a few examples later on. But almost everything we do involves too many people. How many people have heard of Coinbase? Coinbase is the largest crypto brokerage in the world. Huge company, publicly traded, thousands of employees, offices all around, very smart people, processes something like $50 billion of trades in a month. How many people have heard of Uniswap? I see 2 hands. Uniswap is a software program with no employees, no offices. It's running automatically. It processes about $30 billion in crypto trades per month, and it does it flawlessly. If you think about what happens when you can program money, you can do what Coinbase does with thousands of employees, with 0 employees 24/7, 365 processing automatically. And if you don't think Wall Street's going to wake up and replace a lot of middle office and move to blockchain-based rails, I just don't know how that won't happen. But here's the last thing it does, and this is actually the most important. You probably can't see this. Does anyone remember NFTs? Yeah, okay. Do you remember when Sotheby's did an art auction and auctioned a digital piece of artwork for $65 million? And if you zoomed in, looked like it was done by my teenager. NFTs are ridiculous. People paid $1 million for a digital rock. Totally insane. I get that. I'm not here to support NFTs. But here's the question you should ask about this Sotheby's art auction. Why was it the first time we auctioned art, digital art, in 2022? People have been doing digital art since the 1970s. Andy Warhol did digital art. There's been digital art courses at NYU. There are digital art installations. Why was this the first public art auction of digital art, given how important digital is to our age? The reason is, until you have a blockchain, you can't own a digital thing. When you own a digital thing, what you own is a string of letters and numbers. And anyone can push Control-C, Control-V, and copy that. So prior to the launch of a blockchain, the only way you could own something is if a third party you trusted maintained a database that says this belongs to you. So my bank account is 10 numbers written on the bottom of my check. I own that because Wells Fargo maintains a database that says Matt owns these 10 numbers. But if you think of a piece of digital art, just a string of letters and numbers, representation of this digital artwork, who would you trust to own it? Would you trust Mark Zuckerberg to keep a list of who owns that? Would you trust Sotheby's to keep a list of who owns it? Would you trust the New York Stock Exchange? You don't want to trust anyone. We talk about Bitcoin as digital gold because it's the first digital asset you could own without trusting anyone. You don't have to put your faith in Mark Zuckerberg. You don't have to put your faith in Elon Musk. You don't have to put your faith in Wells Fargo or JP Morgan. You can own a digital asset in the same way that I own this cell phone. You can prove to anyone around the world without asking anyone that this is yours and no one can take it away from you. So you see charts like this. Bitcoin, we saw in the last presentation, you can't see any of the other lines because Bitcoin is the best performing asset in the world over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, on to 15 years. You can't find a time period where it hasn't been the best performing asset. The last 10 years, it's up 44,000%. The S&P 500 is up 262%. I use this slide because people look at it and they're like, how is this thing that no one is using to buy coffee the best performing asset in the world? Why are some of the smartest people focusing on this space? Why is Ray Dalio big in this space? Why is Stan Druckenmiller big in this space? Why are the largest VC firms big in this space? Why does JP Morgan, even though it talks publicly against crypto, have 250 plus people building on blockchain? Why is it such a big deal? And the answer is that this kind of technological evolution rarely happens. I'm old enough to remember when the internet was terrible. Does anybody remember when the internet was terrible? Yes, it was so bad. You used to look up pages in books. At the time, really, I first using the internet, the only thing you could do was send files over it. Many of you may remember FTPing someone a file, and we thought that was amazing, sending a file over the internet. The history of the internet since Al Gore created it is that periodically we have breakthroughs on what we can send. So in 1982, we figured out something called SMTP. You may not have heard that, but you may have seen it at the start of your internet browser. It stands for Simple Mail Transmission Protocol. That was the first time we were able to figure out how to send text over the internet. That created Hotmail, AOL, email, disrupted the postal service. In 1989, we figured out how to send links over the internet through something called the World Wide Web, HTTP. That created the internet we know today, disrupted all of media and advertising, really changed the game. In 1994, we figured out how to send credit card information over the internet without disclosing it. Previously, it used to flow through the internet. You could see all 16 numbers so anyone could steal it. I remember in high school being told never put credit card information on the internet. Guess what was founded in July of 1994? Anyone guess? Amazon. Because before you could send credit card information over the internet, you couldn't have e-commerce. Once you could, we disrupted all of retail. We figured out voice in 95. You couldn't send voice over the internet before 1995. And in 2009, we figured out how to do video without it buffering through something called HLS. And now we all have Netflix and we've cut the cord. The reason I bring this up is because what crypto and blockchain is not a new way to buy coffee. It's the first time we've ever been able to have money and property on the internet. And the reason that's interesting is that money and property and finance is a bigger industry than media. It's a bigger industry than retail. It's a bigger industry than telephony. It's a bigger industry certainly than the postal service. And every time the internet has come to be able to move a new thing over it, it has disrupted a major industry. I started at the top by saying this is the most important development in finance in the last 50 years. The reason is because it lets finance move natively over the internet. There's no guarantee that Bitcoin and blockchain will disrupt finance in the same way Amazon disrupted retail. I'm not here to say that. But I am here to say that the reason it's been the best performing asset class of all time, the reason it's brought so many VCs into this space, is because it has the opportunity to disrupt the largest market the internet's ever gone after. And that's why I don't think all the easy money has been made. All right, one more Professor Matt thing, and then we're going to get into the market. I apologize. The other thing that I really hate in crypto, I hate people who think it's a way to buy coffee, is all crypto assets are the same. They're like 20,000 crypto assets or something stupid like that. And the reason people get them confused is because they think those logos on the right, which are Bitcoin, Ethereum, Solana, and Uniswap, those are four blockchains, are analogous to the logos on the left, which are currencies. And they're like, Bitcoin is the internet currency. The internet is a global thing. Why do we need more than one? If Bitcoin is to the dollar as Ethereum, which is the second largest asset, is to the euro, they should just compete. It should only be Bitcoin. I actually think Bitcoin is the only form of money. But this is the wrong analogy. The right analogy is the one in the middle, which is every crypto asset is two things. It's an asset and a blockchain. The Bitcoin asset, the Bitcoin blockchain. The Ethereum asset, the Ethereum blockchain. Blockchains are just pieces of software, and we all know pieces of software can be good at different things, right? Salesforce and Microsoft are both software providers, but they do very different things. So when you hear about all these different assets, you have to ask yourself, how is the underlying software different? And I'm not going to go through all of them. I'm going to go through two. Bitcoin was the first blockchain. As a piece of software, it's really simple. All you can do with Bitcoin is send it, receive it, destroy it. You can do some very simple if-then statements. It's a limited programming surface. Ethereum was developed after Bitcoin. It looked at Bitcoin and said, it's so cool. You can move money internationally 24/7, 365. It's so cool that you can hold a digital asset. What if we could program this to act like a bank? What if we could program it to act like the stock exchange? What if we could program it to act like a prime broker? So the Ethereum blockchain can be programmed to do everything. It's called Turing complete. You can make it do everything. You can make it sing and dance. Now you all are probably thinking, why is Bitcoin more valuable than Ethereum if Ethereum can do everything and Bitcoin can only do a few things? And the answer is that in software design, if you have a limited programming capability, it has one big advantage, which is it's really secure. The Bitcoin blockchain software rarely upgrades. When you upgrade, you introduce risk. The Ethereum software upgrades all the time because it's trying to sing and dance and solve all these problems. So when people talk about Bitcoin as digital gold, the reason is not that the logo is orange. The reason is that as a piece of software, it's designed perfectly to secure wealth. People talk about Ethereum as this new platform for finance, and that is true. We'll go through a few examples shortly. But it's never going to be as good at storing wealth as Bitcoin. And Bitcoin's never been as good as being a platform to reinvent banks as Ethereum. And as you go through asset 2, 3, 4, 5, down to 1,000, you get all these variations on the theme. Okay, that's everything you need to know about crypto from a basic perspective. I have about 6 minutes left, so I'm going to go through these. All right, let's talk about Bitcoin digital gold. I think Bitcoin will displace or be as large as gold. And I know that sounds crazy to you. But let's look at the characteristics. Bitcoin and gold share lots of characteristics. Limited supply, they're fungible, they're decentralized, they're borderless. The only thing gold has going over Bitcoin, which is a huge thing, don't get me wrong, is 5,000 plus years of history, right? Everyone trusts gold. But Bitcoin can do things that gold can't. You can move it internationally. You can store it effectively for free. My Bitcoin ETF has about $4 billion in assets. If I wanted to move it, I can push a button and it moves somewhere. If I had it in gold, I'd have to charter an airliner and fly it somewhere. It's much more difficult. Now, I know what you're thinking. How can something this volatile be a store of value? How can something this volatile compete with gold? Look at those drawdowns, 35, 65, 44, 31. It's a mess. Look at your hair, Matt. It's turning gray. Or it is gray, if you want to be mean. But this is actually not a chart of Bitcoin. That's a chart of gold since 1969 to 2024. And the thing about gold is people talk about its 5,000-year history. It actually really has like a 40-year history because we were on the gold standard until the early 70s. And if you look at this chart, there were two big up periods, right? There was when we went off the gold standard and it rallied from $35 to like $1,000. And then there was that period starting in 2004 when it went from 200 to today, whatever, 25, 30, 3,000. What were those two periods? The first period was when the world figured out what gold was. We were off the gold standard. Is this a barbarous relic or does it matter to society? We decided it mattered to society and we went from $35 to $1,000. The second one, starting in 2004, that big ramp up that's still continuing, is when we got the gold ETF that launched in 2004, made it easy to buy. One of the reasons I'm so optimistic about Bitcoin is we have both of those things going on at once. So right now, people are figuring out, does Bitcoin matter in the world? And at the same time, the ETF has made it extraordinarily easy to buy. And if you look at the flows coming into those markets, you can see why we've gone up to $100,000, and I think why we're going to go higher. What could it get to? This is a simple market for Bitcoin. If you look at the size of the gold market and you assume Bitcoin will penetrate half of that market, in other words, young people favor Bitcoin over gold. As they get older, they will want Bitcoin. You could assume that the price of Bitcoin, did I go over? The price of Bitcoin, that's all right. We'll try this. That's right. Whoa. It worked. Now I have the voice of God. Yeah. Anyway, you get to very high price targets. I will say that these price targets, when I got into crypto, people were like, you must be joking, Matt. Now we have Larry Fink, CEO of BlackRock, saying it could be $700,000. But I actually think it could be more than that. I'll add that Bitcoin does more than just gold, right? It's not only a way to store wealth, it can be used as a functional currency. I'll give you a few sort of shock statistics. This chart looks at the inflows into gold ETFs starting in year one versus the inflow into Bitcoin ETFs. Bitcoin ETFs are the most successful ETF launch of all time. Last year, Bitcoin ETFs bought about 500,000 Bitcoin. The network only produces 165,000 a year, so that's a pretty good supply-demand imbalance. We also have corporations buying Bitcoin, putting it on their balance sheet. And then my favorite is we have nation states buying Bitcoin. Just this week, we learned that Abu Dhabi bought $500 million of Bitcoin over the last 3 months. I've talked to 2 nation states that are thinking about how to acquire Bitcoin. To get to the end of this, I think Bitcoin has 2 near-term roles in the world. I think it's a form of digital gold for individuals to save their wealth. And I think relatively soon, sooner than many people think, it will be used as a tool to transact international commerce between countries that don't like each other. That's the closest we're going to get to the gold use. I think we're moving into a world where not everyone wants to transact in dollars, and not everyone wants to transact in yuan, and not everyone wants to transact in rupees. And the world will want a non-political currency for international transactions. If you think we're moving into a multipolar world, that seems like a natural place. Literally the only thing that works is Bitcoin, because you can't use gold for transactions. It's too slow. But you can use Bitcoin. And so I imagine a world in a few years where people will save in Bitcoin and Bitcoin will be used for international transactions. And if I'm right, I think it will be a $10+ trillion asset. Okay, great. Let's go. We can go to questions now.
Yeah, and we still have the same 2 microphones in the middle of the room up there, so please do step up, make it easier for Matt to hear you.
Love it. Ask the hard ones. Oh, great. We'll do that, and then we'll go to the mic. Ethereum is different than Bitcoin. Ethereum is like a platform that you can build applications on top of, right? What's an example of an application? Uniswap, which I just mentioned is a competitor to Coinbase, is built on top of Ethereum, in the same way that Uber is built on top of the Apple iOS App Store. And Apple makes money when you use Uber. The way Ethereum works is if you want to do a transaction on Ethereum, let's say you want to do a trade in Uniswap, you have to pay a fee in ETH in Ethereum, and that fee is destroyed or consumed forever, that reduces the supply in Ethereum. So the more people who are using these applications, the more Ethereum is being burnt and removed from the system, which makes it more scarce. It works akin to a stock buyback. That's how it returns capital to you. There are about 120 million Ethereum. If a lot of people use it, that number will go down progressively, and therefore the value will go up as more people want to use it. Yeah, question in the middle.
So the one thing that gold has over Bitcoin is that gold is real, a physical asset. So do you think we will eventually reach a point where we can get gold properly on the blockchain, therefore it's tying value to a real physical asset, or do you feel like that is unnecessary?
This is a great question. We already have tokenized versions of gold on the blockchain that move rapidly. The challenge is you still have the central source of failure, which is you have to store gold somewhere, and that is somewhere that the gold can be seized or interfered with or stolen or taken. And whether you're a citizen or a country, right? Russia just went through the experience of having its treasuries seized. I don't think people will want central source of failure. The only other thing I would say about the physical, but it's a great question, I may be wrong, the physical real divide, is people undercount how valuable digital assets are. If all of you lost your cell phones right now, would you be sad that you had to buy a new cell phone? Or would you be sad that you lost all your digital photos? The digital photos are actually the valuable thing. The iPhone can be replaced. So I think there are sort of a discounting of digital. Yeah? Ask away.
Okay, following up on that same question. Years ago, I thought Bitcoin sounded cool, so I started a wallet and I got some Bitcoin. I got busy in my business. I lost my password. So you can never get it back from what I'm saying, so that's why I'm down on Bitcoin. It can disappear.
Yes. Yeah. That is right. And a lot of people, I'm sorry you had that experience. A lot of people bought Bitcoin when it wasn't that valuable and wrote down their password and lost it, which is understandable. I've lost passwords as well. Today, the system has evolved, so it's much easier to securely own your Bitcoin. There are custodial solutions that make it very easy, even self-sovereignly holding your keys. They're much better hardware solutions. I think of it a little bit like money. I keep some cash in my wallet. If I lose that, it could be lost forever. I keep most of my cash in my bank where it's secured. I think people will ultimately do that with Bitcoin. But the situation today is vastly improved versus where it was 5 or 10 years ago.
Do one more question, and then Matt's going to, just so everyone is aware, Matt's going to be on a panel right up here
That's right.
shortly. So.
I'm going to let both of these guys.
Okay.
All right.
Sorry.
Oh, you're too nice. We'll go to the question at the mic, and then we'll go there and there.
Okay, so I know you talked a lot about Bitcoin and Ethereum, but where do you see XRP going as far as like competing with Bitcoin with banks in transactions? Because I know they use it to send money globally.
Yeah, great question. XRP is another variation of a type of crypto asset. When I think of XRP's core value, it is a fast blockchain, and it's a blockchain where it's easier to do regulated transactions. I think we don't know what XRP will be because for the last 4 years, it's faced almost existential threat from the SEC suing it, and no one was going to build on the XRP blockchain with the SEC sword of Damocles hanging over it. And so I think we'll find out now that we're in a more positive regulatory environment. Will it be successful in attracting business-to-business users? I imagine as an investor, there are two outcomes for XRP. I do think there's a world where it's worth zero, and I do think there's a world where it gains substantial sort of traction amongst institutional investors now that it isn't so threatened from a regulatory perspective, and it's used in sort of regulated, decentralized finance applications. And I bet we'll know that over the next 24 months or so. Great question. So the gentleman said, I understand there are ISO certifications for some Bitcoin. There are concerns amongst some institutional investors about tainted Bitcoin. It definitely is true in Bitcoin's distant past that it was used significantly for nefarious activities, and that's no longer true. The beauty of it, when you work with an institutional provider and you use an institutional custodian, as say Bitwise does, is the custodian screens out Bitcoin that is traced to nefarious wallets. So it refuses to accept those at the custodial level. The way I would think about how I suspect it will evolve is that there'll be a portion of Bitcoin that's just sort of lost and frozen in this dark netherworld, and the rest of Bitcoin will go through these screens. The beauty of the blockchain is you can trace Bitcoin back to its origin, and therefore you can screen out if you're concerned about tainted Bitcoin in that sense. Yeah, last question. Yeah, I should say the lawyer sitting on my shoulder at all times says I can't tell you. But here's I'm very optimistic we'll see a significant number of new ETFs. So Bitwise has a filing. I can't speak to that filing specifically, but I can speak to the general tone and tenor, which is under the previous SEC, it was extraordinarily hard to get anything done. We worked for 7 years to launch our Bitcoin ETF and did 30 meetings in DC, were told no and no, spent millions of dollars on legal fees. Finally got it because someone sued the SEC and won, which had never happened in the history of ETFs. In contrast to that, we had another ETF application last month that I found out was approved on Twitter, which is just a very different experience from making 30 trips to DC. And so I raise that to say that the SEC is much more open to these applications than it was in the past. That's not a guarantee that we'll get a Solana ETF. It is a guarantee that the SEC now will have a discussion about that. And so I'm optimistic, and we're pushing for that along with other people. I realize I covered a lot. Thank you so much. I appreciate all of you.